Good morning, patron subscribers. Hope you're doing well. You've had a nice weekend. It went really quickly as normal, and now it's Monday again, but that's fine. What's interesting about gold, there's lots of things to talk about, but technically we have to look at 1916 because this is where the institutional volumes have come in, and these are the big players who can actually push price higher or lower, and they've come in on their bullish bets there, and they've managed to hold price above 1917. So if we do go below that level, we'll target the SLC. Okay, so that's the entry there, and note that we are a sell, the big picture. Okay, and we really want to be keeping an eye on this profit ratio as well. If we have an interchange, then we probably want to be changing our bias, and we want to be looking for shorts because of that, but really also because of this. If you zoom out a long way, they basically held long for ages, all that move. So these guys have made a ton of money, and if they decide to swap and they switch, we want to be taking notice of that, okay? And 1910, I think 1970, I think so, yeah. So that's an old stop loss cluster now. It originally formed back here, so it's quite old. And so that's the thing. So we want to be selling it below 1916 to target the SLC. So that's the trade today. And if they swap, then we should be targeting lower down. And the bears break even 1830, which is down here. So we're teasing the bulls break even. We might come down to the bears break even, which is miles away, which is like $90 away. So for today, for an intraday trade, SLC below 1917, so you're looking for a $7 move there. It might be FOMC induced. We might have to wait. It might go sideways. Okay, it's hard to say, but that's the trade that I'm looking for today. Aussie large stop loss cluster 70.54, weekly open, daily open. So they're going to be a resistance today. Below we target the SLC. Above, we target the SLC. So it's nice and simple, and these are your monthly levels. If you're looking for a longer term outlook, HR long, HR short. But for today, target the SLC. Okay, so it's nice and simple. As AU. EU, we'll look at EU, and it's pumped a lot. And you'll see what's happened is that they shorted it. And by doing so, it did push price that much higher. One above is at 109.30. One below is large at 108.30. So they're the same stop loss clusters from Friday. They haven't changed. The sizes would have changed, but the location has remained the same. Weekly open, daily open. So as long as we remain above that, you know, we've got a bullish technical look for 47 pip move to the SLC. So that, you know, that's a potential scenario. Below the WO, DO, target the SLC. So I mean, really, we pushed higher because of this. I think I'll have to wait and see there. GU. Let's have a look. Weekly open. So you know, you could probably argue this was a bit of a phony move, maybe just to induce some positions. But we got weekly open now, so because we got that, we've got a long way to the SLC. So that's at 124.50. One below is at 123.39. So weekly open is your level of note. I kind of tempted to think we're going to sell this, but the indices were looking really heavy this morning. Now what might have happened is that they're going to start pumping. If they start pumping, this can do okay. This particular pair, because the pound is riskier than the USD. Dollar CAD. If you want us to look at like Kiwi or anything, Euro CAD, we can look at that. I just can't show you the sentiment for anything in the minor FX. I can show you major FX. Dollar CAD, one below, 132.95. It's huge and miles away, so I won't show the one above. Weekly open is there, so we can't really target the stop loss cluster because it's too far away. But there's your weekly open, daily open. And so that's a level you just want to make a note of if you're trading this pair. Dollar Swiss. And this week is going to be one of the biggest weeks for a long time in terms of volatility. got the FOMC and we've got the ECB this week. 92.80, and the one below is at 91.59. Weekly open, there's your level of note. Whether or not you want to try and target that, we are a seller at the big picture. So really, we should probably be falling below weekly open, daily open. We can come here, I think. It's quite tricky, isn't it? So really, we should be falling because they're very long. But it seems to just be overlooking it. We're going higher despite them being long. So it might just continue to ignore that. But we really, from a sentimental view, want to be targeting the SLC below weekly open. That's your level of note. And dollar yen, this last one. And we had a big pump, as you can see. Stop loss clusters are quite small. 130.65, one below is at 129 on the dot, and they're selling it. So that's of note, actually. That is interesting. IFX book and the average line. So the fact they're selling it, we can probably come up here. We've got the weekly open, so 130.64. It's possible. This does move a lot. The ATR is very high, and it's quite extreme, so it can do like 100 pips quite easily, and also cross yen as well, not just dollar yen. So be careful. Hopefully the videos were useful, and I'll be speaking to you guys tomorrow, and let's see what happens. Probably no trade of the day tomorrow because we've got the FOMC jitters, and probably no trade of the day on Wednesday, and we'll have one on Thursday, but we have to be careful, and it won't be a euro trade on Thursday because of the ECB. But if the bubbles have aligned and it's not a euro trade on Thursday, then we'll have one. But no trade of the day tomorrow or Wednesday because of the jitters, and it's going to probably be a big risk off or risk on week. It's very hard to say, and that's that. So just trade safely, know where your exit is, and know where to target. What I'm doing right now is that I'm looking for 30-40 pip TP, and I'm not being greedy. I'm not being greedy in this market. I'm thinking, well, 20 pip stop loss, 40 pip TP, 2R, get in and out, and I'm not looking for home runs in this market, not until we've got some more clarity from the Fed and ECB. So trade carefully, and I'll speak to you guys soon.